Welcome to Odds and Ends, StockOdds podcast here with Rob Friesen and Dave Singh. Good evening, Rob. How's everything on your end?
Not too bad. I guess we got to prepare for tomorrow if you haven't already done so, hey?
Yeah, and we're coming up on a nice seasonality here, mid-month seasonality in the final month of the year. And I found some interesting things in there we can chat about today as well. And we're coming from a position where the market kind of sold off after Thanksgiving, and we've kind of come back all that distance. So we're doing well. The VIX is down. Market seems strong, and certain sectors are outperforming others. And it'd be nice to see what the data says about that and what has the best odds. So, what do you want to start off with?
It was interesting on Friday where we saw the consumer defensive and technology both moving higher, and so just interesting combination there. So yeah, it's going to be an interesting week, and we culminate it with expiration Friday. So there are a couple things for people to note that in December you have some rebalancing that's done, different indices, but one notable one probably covers a few stocks people follow is the NASDAQ 100. And you've got Airbnb and Lucid, Fortinet, Palo Alto, Zscaler, and Datadog. They're all being added. And the ones being subtracted are CDW Corp, Fox Corp, Cerner Corp, Checkpoint Software, Trip.com, and Insight are being removed. So typically with these additions, there can be a run-up ahead of time before the announcement of these additions and deletions, just because people kind of crunch their people are hired at these firms to crunch these types of things and what's going to be added, and it's changes in market cap. So it's if you know the formula, you can kind of figure it out. You don't have to wait for the official announcement, and then they get the jump on it and they run up. But that being said, there still is a bit of drift up to the point of being added. So I wouldn't be, if I saw, Airbnb strong or Palo Alto strong or something like that, I wouldn't be fading it. I would respect that, it could be part of the addition emphasis, some more demand, right? So just keep that in mind for some of these tech stocks. And we have the Dow Jones Industrial Averages building on Friday's gains, but it's not at new highs for the year. It's different for the S&P 500, which is also building on those gains, but it is at a new high. It closed at a new high on Friday, and it's continuing to push into new high territory now with the futures open. NASDAQ 100 is also gaining on Friday's gains, but the high for the NASDAQ 100 was November the 19th in terms of a record close. So again, there's a difference between prices that are tested and where something actually closes, and we do give more weight and more credence to where things actually close. And so that was what was so notable about Friday for the S&P 500, for example, because it did actually close into new high territory. So the record closed for November 19th was 16,575 on the NASDAQ 100, and it's currently around the 16,391 now. So there's a couple hundred points to go. The Russell 2000, we had a swing low, then we bounced up a little bit, and we have a higher low that's formed now in the last couple weeks here. So it's well off the highs, and it's a long road to get back to new highs. It is now, for where the futures are at, it is outperforming the other three. It's almost double the performance for this Sunday.
Well, that ties in nicely with the seasonality too, because for the mid-month seasonality, it's expected to outperform the spider and also the third Friday. So all those things are lining up for strength in small caps versus the spider.
It should be this time of year. I mean, normally from November through April, we do have leadership in the small caps, but we just had such a weird recent time of it, from the massive pop on November 1st as we entered this 6-month window. And it got ahead of itself, went way up there, broke into new high territory, and then all of a sudden to sort of be hit with this risk off. They took so many technology stocks out and shot them, and then so many Chinese stocks got shot, and when we have the Russell 2000, many of them got shot. So anything that sort of didn't have really robust earnings, dividends, more of a value consideration, just was to be avoided like the plague there for a little bit of time, right? So some of that has bounced back, of course, but the Russell certainly has been struggling. And so this could be the week where things come together, and it's more of a risk on week, perhaps, with the mid-month seasonality and going into expiration on Friday. It might be that volatility continues to drop because the VIX has been heading down from its recent spike, and it probably head towards the 16. So I think that's the trajectory for this week, is lower VIX, a little bit higher indices. And back over to you. What about the groups and things?
Yeah, well, for individual stocks, I did a screen to see for mid-month seasonality, and a couple interesting things popped up. A lot of the solar stocks like Run, Enphase, SEDG, First Solar, these are expected to be quite strong during mid-month for December. So I took that theme and I went and checked the TAN, the TAN ETF, which is an ETF of solar stocks, to see what does StockOdds say about that. And that one showed a mid-month seasonality performance of 4.3% relative to the spider of minus 0.48%. So quite a bit of strength relative to the spider. So there could be something interesting in solar stocks this week. And then I looked at chip stocks, the SMH. Those are expected to be still slightly down, but outperforming the spider. And I looked at check the QQQs as well. Again, more strength in the spider. And even I think XLK, that's about the same as the spider. So there's this theme of small cap outperformance, and also within tech, some of the more high beta stuff, which would be chips, and then really the solar stocks. So that was something interesting that popped up in today's work.
Yeah. So what about the inflation argument? And we also have a Fed meeting coming up, right? So we've had some recent CPI numbers, and I mean there's lots of stuff that's come out talking about just the general price increases across the board for so many things. So how does inflation weigh on that, and are we looking at that continuing to be a theme this week as well?
Well, in terms of the chips and technology, or in general?
I mean, it could weigh on some of these tech. I mean, we still have supply chain bottlenecks in chips too, right?
Well, chips are a commodity, and with inflation, they have pricing power, right? People are dependent on them, so I think they can still do great with inflation. I was just checking the TLT right now, the interest rates. They had come down. The 10-year came down sharply about a couple of weeks ago, but it's rebounded quite a bit of that. So we're at like a 1.5% on the 10-year, and that's going to be strong for financials. And I don't think it's going to be where if interest rates go up, it's going to kill all of tech. I think that's been digested, and that's where you're baked in, that we're expecting to be higher interest rates come a year from now. So I think any high growth tech stocks that would have been killed, they've already been chopped down to 20-30%. We've seen those ARC kind of stocks go down. But these things like the major chip stocks and the big cap technology, they've absorbed the fact that there will be higher interest rates. And I think they're showing strength even though interest rates are going up.
Mm-hmm. Well, we have seen a bit more shift to value over the last couple of weeks. So interested to see how that theme persists. But, this is what the blend of this moving to defensive or value, along with still picking up some of these tech names, is that, the market's proven over the last 10 to 20 years, you have to bet on tech, and it's so scalable, right? It's they're always willing to pay a bigger premium for that scalability. And so there's money flow into these big names that got corrected. And it seems to be there too, to some degree, in the financials, even in spite of all the innovation that's happening in fintech world. They still like to pick up these traditional financials too. Maybe the argument is that they will gobble up the other, tech names that are, encroaching on them competition-wise or whatever. But yeah, it's interesting. So of all the groups for this week, what would you focus on the long side? What would you focus on the short side?
Yeah, I think long side would be still tech, and I think it is tech and some higher beta tech within that, and then short maybe the defensive stuff, utility, healthcare. It's a risk on theme, right? So
yeah, I mean, I guess you would have to sort that a little bit too into some of the value aspects of that if they want to continue. Like we can have a risk on environment in terms of gobbling up some of the techs and being willing to go into the smaller cap area again because it's so discounted relative to these other names. You can still have that backdrop as well as the deployment of capital into value, right? Like some have called for, I forget who it was that I saw, called for sort of like dumping, all the riskier stuff and continuing to, to buy everything else, basically. I should find that article, but anyway, it was just interesting because, the argument was when you move into an inflationary environment, some of these speculative names they're just not going to be able to produce and keep up where, the traditional value components have proven themselves through inflationary periods, and you might as well stick with that, stick with what you know. So,
well, look at Apple. Like I think it hit a new all-time high on Friday as well, and that's both value and growth, right? It's almost defensive when people get nervous. They want to go into the high-quality mega caps. They go into there, and also they're going to get the benefit from growth. So that's keeps going up no matter what, and we just hit an all-time high, I think, Friday.
Yeah, no, I mean, in value, and Apple is, at these levels getting more expensive. Like if we go back, a year or two, even the fundamentals were so much more attractive, but it's risen a long way since then. So, and the arguments for growth, may be diminishing, even looking at its projections for EPS from this year to next year. They're substantially reduced, so I'm not sure exactly where that comes from. Maybe the cycle on, new phones is going to start to slow down. Like how much more powerful of an iPhone do you need next, and when, right? But I mean, they do have a lot of divisions. So, and the thing is, I think still some of the unwind is not the movement in Apple is not just because of the EV car, aspect or whatever. I think some of the unwind is coming from what I've talked about before, is that it was being used as a hedge against a lot of other upcomers. And because it was so mature and it had stuck in a range for so long, I mean, it hardly went anywhere really between July and November. And it's just been, late in November that it took off and again in December. So I think some of it's the unwind, or where else do people, they know they can rely on Apple. So where else do you want to shift your money? Money doesn't leave the market. It moves around. It's not like, well, let's just take everything out. No, let's find something a little safer to put it into. And, it does pay an 88-cent dividend annually. So it's not like, you're not getting nothing back.
So
it has
recent rise is like a short covering rally.
It is kind of like a short covering rally, even though the percentage of the float is so small. The short ratio is negligible on Apple. But I think that it was used as a defensive positioning, like going into any of the other of the Dow companies. It's like, well, we want tech, we want safety, we want defensive, we want value. Oh, I guess we only have Apple to choose from. So that's kind of what's happened there. But anyway, we'll wrap it up. Anything more in closing here?
No, just industrials are a little weaker too than the spider for mid-month seasonality.
What about some of these defensive names under the saber rattling that's going on? The G7 just gave Putin a warning, blah, blah, blah. Do you think any of the defense contractors are set to shine here?
I didn't see those in my screens today. Did you do any research on those?
Oh, I haven't, but just was thinking. Because the G7 just kind of presented Putin with their position on this Ukraine thing. And we got Taiwan still as a concern too. So for China, but yeah, I don't know. There might be some opportunity. I would think that it's probably. Northern Grumman is looking a lot better in terms of breaking out versus Lockheed Martin, things like that. I'm not recommending Northern Grumman. I'm just saying that you go check the StockOdds on some of these defense contractors.
And General Dynamics is pretty strong as well.
Yeah. So we can check on that. There could be a couple good names to put in there. Yeah, GD. So anyway,
previously you said there's some end of week to beginning of week seasonality in the defense contractors too, right? Like they do the best on Fridays or Mondays, you were saying?
Defense was a little bit better on Fridays just because of the weekend geopolitical risk globally and stuff. And so media was down on Friday. Defense contractors were up on a Friday generally, historically. So, but the defense contractors have been kind of weak through November, just because they weren't really included that much in the new budget, and as far as spending, and so the prospects for these things were looking pretty bleak. But count on other countries to raise the temperature and bring them back into focus. So since the saber rattling and the positioning of Russian troops along the border in Ukraine, the defense contractors have certainly risen to that challenge. Okay. All right. Well, let's call it at 8, and good luck on your stuff, and we'll chat with you soon.
Good luck. Thanks.
Yeah. Thanks.